The stock market just fell 10,000 points and now the government wants to pay off your student loans. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. We just hit a historic point because on March 23rd, the Dow Jones officially fell 10,000 points off of its high earlier in 2020, and then it ended up closing just a few points higher. Some of that recent sell-off, some of it, is due to the fact that the government cannot agree on a stimulus package which will help the American people and help the economy, even though we were supposed to have a deal last week. And each day that this gets delayed, more people get sick, more Americans lose their jobs, and more businesses have to shut their doors. So while all this bickering is going on, you might be wondering, what do I do with my 401k? Should I be investing right now? Am I gonna have a job tomorrow? And of course, do stores have toilet paper yet? We are living through history, and I can't wait to see the movies and history books that people make on this 2020 crisis. If you're looking for an actor, you know who to ask. But until the extra large short and the Lion on Wall Street hit the box office, you need to know how to take care of your money, which is what I'm going to be talking about today. So make sure you watch this video until the end, because in the end of this video, I'm going to be talking about exactly what's happening in the economy right now. But before I get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't show our video to anybody else, and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week, and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. Over the last few weeks, we've seen the Federal Reserve Bank, or the Fed, and the government take extreme measures trying to stimulate the economy. The Fed gave banks trillions of dollars, this way they don't run out of money. The government has proposed a $1 trillion stimulus package that would send $1,000 checks to almost all Americans, which hasn't been approved yet. And now the government has just proposed paying off your student loans if you have less than $30,000 worth of student loans. I don't know if that's gonna happen. I mean, that was just put on the table and people can't even agree to a $1,000 check, so I don't know. We have the billion-dollar businesses asking for the taxpayer-paid bailoff because, these businesses don't know how to manage their money. And of course, this all means that our paper dollars are being printed like monopoly money. These stimulus plans sound nice. I mean, send me a check and bail out the businesses, except none of these things actually fix the problem. They're just trying to treat symptoms of the problem. Think of it this way. A weed starts growing on your beautiful lawn and you want to get rid of it. So you come up to the weed and you just chop off the top, and now your lawn looks nice. A week later, you go for a walk on your property and you look on your lawn and you see, whoa, that weed just grew back, this time thicker than before, and now this weed grew with 2 weed friends. Holy weed! Chopping the top off the weed isn't gonna fix the problem. If you want the weed to stop growing, you gotta go into the earth, find the root of the weed, and pull that out. Our economy works the same way. The root cause of the problem right now is twofold. One, people are getting sick. If people are sick, they're scared to spend their money, they're scared to leave their house, they're not gonna make any money, and they're not gonna be able to spend any money to support the economy. Second, bad financial decisions are being rewarded. If I'm a multi-billion-dollar business, and I've been making hundreds of millions of dollars every single year in profit, and I've been taking all this money and buying fancy cars and yachts and making my owners rich, and now I don't have money to pay my employees, that shouldn't be the taxpayers' problem. All these stimulus measures are nice and they make us feel good right now, but they don't actually fix the root cause of the problem. Not to mention the fact that printing all this money has long-term consequences that you, taxpayers, have to pay for. And I mean, you can print as much money as you want and pump it into the economy and send people checks and do all of that, but if the economy doesn't start working and people are still sick, it's not gonna make any difference. You gotta fix the root cause of the problem first, that way the economy starts working. Now, when it comes to your money, you need to understand the difference between the stock market and the economy, which are similar but different. The economy, in simple terms, is whether you're getting a paycheck or not. It's if businesses are running and growing and employing people. The stock market is where you can invest in these companies. In an ideal world, the stock market would directly mimic the economy. So if a company you invested in grew by 10%, they made 10% more money or profit, the stock should grow by 10%. It makes sense in theory, but that's not how it works in reality. The stock market is a place where people can buy shares of companies, so you have to factor in the economy and then add in the emotional factor. So a company might grow by 10%, but the stock market might show the company grow by 20% because people get excited and they want to buy it, so this makes the price go higher. Let's look at this practically. This pandemic started in January 2020, and the stock market crash happened in March 2020. That means all of this happened in the first quarter or first 3 months of 2020. While most companies report how they're doing in the economy quarterly, meaning every 3 months, which means we won't know any real figures as to how bad a company was hurt in the economy until at least April. You know I'll be keeping you updated, so if you haven't subscribed to our channel yet, you should do that. That means right now, everybody in the stock market is panicking and guessing about how bad the economy is actually hit because we don't know the real numbers yet. It could be a lot better than expected, or it could be a whole lot worse. All we can do is infer that the economy is hurting because we see the layoffs, we see the government panicking, we see the Fed injecting trillions of dollars into the economy, and we see businesses shutting down. Remember, you can pump as much money as you want into the economy, but it's not going to stop people from getting sick. And it's not going to stop businesses from making greedy business decisions. And it's not going to stop people from being financially uneducated. Everyone's just trying to treat the symptoms because that's a whole lot easier than actually fixing the problem. Right now, the most important thing is to make sure that people are healthy. Because if people are healthy, then the economy can start working again, people can start going to the job again, people can start making money again, and things can start moving. Through history, we've seen stock market crashes follow a certain pattern. The way it works usually is there's a panic selling phase, and then there's a relief rally, and that's followed by a demoralization phase where the stock market falls even lower. Could this crash be different? Sure. But if this crash is anything like the past, that means that we're probably still in the panic phase because March has been pretty much straight down with no relief rally. And if that hasn't happened, that means we still have to go through a demoralization phase. Now, before I go any further on investing, let me just remind you, I'm just a random guy on YouTube. You should always do your own due diligence, and investing has risks. You are never guaranteed to make money when you invest. You might even lose money. So don't just blindly listen to a random guy on YouTube. It is impossible to predict the bottom, but history has showed us that over the long run, strong companies and the economy will recover. There's a chance that the stock market will come down a whole lot more. And there's also a chance that the virus goes away very quickly, and then people start working and the economy picks up, and then the stock market rebounds like a yo-yo in a way that we've never seen before. If you are a long-term investor, like you have money in the 401k or you're investing for a retirement, which is 10, 20, 30 years away, then leave your money alone. If anything, this should be the time where you're doubling down on buying and maxing out your contributions. This way, you can take advantage of stocks that are on sale. Sure, the stock market can and probably will fall more, but again, history has showed us that strong companies and the stock market and the economy will thrive again. If you are investing for the long term, the only reason why you should be making drastic sells is if a company you're invested in is on the verge of bankruptcy. If that's the case, you need to sell and get whatever cash you can out as fast as possible. If you are a new investor and you don't know how to analyze companies, here's a couple things you should know. First, invest for the long term. Nobody knows how long this recession is going to last. I mean, everybody can have guesses and predictions, but they're just guesses and predictions. So you should be going in with the mindset that you're not going to be able to touch this cash that you're investing for at least 5 years. 2, don't treat this like gambling where you come into the stock market and you start throwing money into random companies. If you don't know how to analyze a company, the simplest thing you can do is invest in an index fund. An index fund like VOO or SPY, SPY, again, I'm not telling you what to buy, just giving you examples. These index funds just mimic the top 500 companies in the United States. So if the stock market goes up, your index fund goes up. Now, you don't have to worry about finding the perfect company and risking all your money going down the drain. The key to succeeding in the stock market is you need to understand what's happening in the economy, and I'm going to be talking about what's going on right now in just a minute. But if you want to start nibbling on these stocks and funds that are on sale, then you need to use a stock brokerage, and I recommend you using our sponsor Webull, and I got their link in the description below. Webull is super simple to use. All you have to do is enter in which stock or fund you want to buy, fund your account, and and then you're done. It's completely free to open an account. They don't charge you any money to make a trade, and the best part is right now they have a limited time promotion going on where Webull is giving Minority Mindset fans 2 free stocks just for investing with them. So if you want to learn more about how you can get your free stocks and you want to start investing with Webull, I got the link to how you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account, they don't charge you any money to make any trades, and they're giving you free stocks. So if you want to learn more, I got the link for you in the description below. In our economy right now, not the stock market, but the economy, we have some pretty serious slowdowns that we've seen. The most obvious is in the airline industry. I mean, with travel bans and people not wanting to leave their homes, airlines are being forced to ground their flights. They have already laid off thousands of people, and now they're threatening bigger layoffs if they don't get bailouts funded by, us, taxpayers. And then you have the airline ripple effect, and so hotels are affected, like the Marriott, who are cutting the salary for all their employees, and they have said that they're going to furlough over 100,000 employees. If you're like me and don't know what furlough means, it means the Marriott isn't making enough money to pay their employees, so they told these 100,000 employees, why don't you go home and get some rest, and we will pay you 20% of your salary. I hope that your landlord doesn't mind. Hilton is shutting down their hotels across the country, so they're not making any money either. You have airline suppliers like GE laying off thousands of people in their aviation division because the airline industry is suffering. Remember the ripple effect. Movie theaters like Cinemark have shut down theaters all around the world, and independent, smaller movie theaters are shut down too. And these smaller movie theaters don't really have the cash to survive, so some of them might not ever open up again. And then as icing on the top, malls are being forced to shut down, especially as more and more states are having these lockdowns. And that is forcing stores in the malls like H&M to permanently lay off thousands and thousands of people. It's very hard to predict what's going to happen next because we are seeing a crash like we've never seen before. We've seen financial meltdowns, and our economy does have financial issues, but now couple that with the fact that people are sick. And the sick rate is not slowing down. I mean, people are actually getting sicker faster now. So how bad can it get? Well, it depends on how long it takes for us to fix the root of the problem. No, unfortunately, we'll probably never stop greedy business decisions, and we'll probably never stop financial illiteracy. People have to stop getting sick. It doesn't matter how many stimulus measures you pull out and how many trillions of dollars you pump into the economy. If people are sick and they're home, the economy cannot function, and so we have to fix that root problem first. This is why it's so important for you to stay on top of what's happening in the finance and business world. This way you can be smart with your money, because like they say, more millionaires are made during recessions than any other time. And if you're looking for an easy way to stay on top of what's happening in the finance and business world, well, you can subscribe to the free Minority Mindset newsletter, where our team first breaks down what's happening in the finance and business world, and then we show you how this news affects your wallet. This way you can be smart with your money. This newsletter is completely free, and you can join our newsletter by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about the hidden cost of these stimulus plans and printing all this money, I already made a video on it, and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.